I don't think we need a rate cut. I mean, the market has to make a mountain out of every molehill. But I mean, coming into today, the market was pricing in up to 2 rate cuts by the January meeting, and the Fed is on pause. So which way were we going to go? Well, Powell said he's not going the market's direction right now. We're staying on the sidelines. They upped their economic assessments that activity's been picking up, and they're saying that inflation is transitory, and so they're not necessarily worried about that at that point. That creates short-term noise, but I mean, it wasn't necessarily the market that pushed the Fed to pause. It was the economy that pushed the Fed to pause. Data slowed down. I mean, the ISM was weak today, but we're still seeing solid growth. So I don't necessarily think the market needs the Fed to cut rates to keep going higher here.
I guess Jeff, the move in both the dollar and the bond market today less pronounced than that final 20 minutes or so we saw in equities. So what was your take on those two asset classes' reaction to the Fed today?
Yeah, well, the bond market was really reactive to Mr. Powell. So you had this really big rally in the front end of the curve early on when they released the statement. But as Mr. Powell started answering questions, and it was really the question about inflation, and the fact that they weren't really concerned about inflation right now, and it wasn't going to necessitate a rate cut, all of a sudden the bond market just spiked back up. I think on the 2 years and the 3 years, 5 years, all moved between 8 and 12 basis points off their lows of the day. So there was a really big move in that intra press conference swing. And that's really what did the repricing. The market was kind of asking for a rate cut. There's been a lot of publicity about inflation being quite low. But I think that what you see in Powell this year is he's dusting off the playbook from Mr. Bernanke as well as Ms. Yellen, where they're actually using this phrase of transitory when inflation misses to the downside. And so this is just patience from the Fed. I think the market was looking for a cut, looking for more ways to continue the stimulus behavior. But again, given the economic data, it doesn't really warrant a cut at this point. And so the front of the curve really repriced during that speech.
So we've been hitting record after record, Jeff. Do you guys at DoubleLine still think we are in a bear market?
Well, it's hard to say you're in a bear market when you set a new all-time high, and that's usually the definition of things.
That's what I'm getting at.
You're good. Yeah, exactly. So the answer is no, from a standpoint of the technical definition. But you do need something here for a catalyst for stocks to move higher. So either earnings need to kick up, either we get a multiple expansion, which some have argued was the reason for a rate cut with lower inflation, perhaps. The Fed would pander to that, or at least acquiesce to that. But I would say that at this stage, you're going to need something stronger or some catalyst to get the equity market stronger at this level. But we've rebounded, as you quite have observed here. And so from these levels, it's really hard to argue, too, with the economic data, asset prices, which Mr. Powell himself did refer to in the press conference today, being quite high, or at least not worrisome. That ultimately the Fed probably doesn't have a bias to tighten. And that's really what he iterated throughout the entire press conference, is there's really no bias.